What's up, traders? Welcome back to the City Traders Imperium YouTube channel. In today's video, I'm going to be interviewing Ayo. Ayo is the latest portfolio manager who recently passed the evaluation and is showing very promising results. He has a discretionary price action strategy, which you'll learn a little bit more in this interview. He is a master's student in finance and also is currently working part-time. So if he can do it, so can you. Listen to this interview and you'll see exactly the type of mindset, the type of process-orientated trader that Ayo is. And if you haven't yet subscribed to this channel or liked it, make sure that you like and support this channel so we can continue to put great content for funded traders like you. On that note, let's start the interview. When did you start learning to trade and how did you learn the current strategy that you use?
Okay, so I'll just start from the beginning. I started trading a very long time ago, but didn't build that discipline to actually get into the right way of trading. I get to flip a $10 account, for instance, and I think that is exactly what trading is about. And then the next time you blow the account. So recently, about 2 years ago, I started reading and listening to some YouTube forex traders, and then you still get a lot of people advertising or marketing to get rich quick scheme, but I was able to find some unique and genuine forex traders on YouTube. So I started reading, learning about it, and then realized it wasn't a get rich quick scheme. So going through the CTI program the first time, I failed actually. But that taught me how to discipline myself, because of course there's the 1.5% stop loss you have to use every time you place a trade. So that taught me a lot about managing my risk. So I decided to sign up for the challenge again with the knowledge I've had about the trading, and from the YouTube channels that I've been watching, I've been able to scale the channel. For my strategy, I base my trading on price action, and I mark my charts, and I just do a break and retest most of the time. I also do fundamentals, and I also do sentimental analysis. So that is majorly the basis of my trading. I don't mark up my chart with indicators. I'm not saying it's not good. If that's what works for you, that's fine. But I basically just go with price action. I mark up my chart, my support and resistance. I wait for it to break from, depending on the zone I'm looking at, and then I wait for the retest. I always have a bias before marking up my chart in the first place. Fundamentals. What are the retail traders doing? The news, for instance. What are the institution market players doing? I check the COT report, things like that. So it's kind of a whole lot for me to get that bias before even looking at the technical. So that's basically how I've been trading, and that's the strategy I use to pass the CTI challenge.
Fantastic. That's definitely it sounds very professional. It sounds very process orientated, and that's one thing that I've noticed with traders who succeed in the game, is that they have a particular process. So your process obviously is very discretional, but the process is important. You include fundamentals and sentimental analysis, and of course the technical. And it seems like if your strategy is break and retest, so you're very much of a momentum trader, and this is I love these strategies, or I love these type of entries, because you have your initial bias based on all the research you just done and all your analysis, and then you wait for the market to give you the indication. So there's no point trying to pick the bottom or picking the top. Once you have that momentum, breakout, retest, that's the entry right there. It's so simple, but yet this it's quite complex in how you reach that decision. So
actually, sometimes I have to wait for the retest like 2 or 3 times. It's not a one size fit all trading for me.
yeah,
Sometimes, I most times I trade gold. Gold is really volatile, and gold has a way of coming back to sweet liquidity.
yes,
Yeah,
I've seen
yeah,
that.
liquidity. Um, so I tend to wait sometimes. Let it retest the first time. I wait for it to bounce up and bounce back down to sweep that liquidity, and then when the momentum is ready to move towards my direction,
Yeah.
I take the strike again.
Oh wow, sounds like you're very much in tune and in sync with gold. So what does your sort of weekly routine look like? Because you obviously need to be very focused in trading your strategy. What kind of routines do you follow on a weekly basis? Like, what do you do with your when you're not trading?
Okay, so at the moment I'm studying my master's in finance, and
Well, that must help with your fundamental analysis, no?
exactly, and I also do a part-time job. So if you look at my trading, it's usually I don't have enough time to go through a lot of pairs. So I just pick 2 pairs that I'm comfortable with. I'm just, getting to the point where I'm going to put in another pair to create that kind of diversity. Um, at the beginning of the week, I just check on a Sunday, check the economic calendar, and I see the major news for the week, and then I begin to process my bias. I look at the COT report when it comes out. I look at the trend. What are the institutional buyers, market movers doing? And then, I check what the retail trader is doing. Also, you know, uh, it is a known fact that, we retail traders most times lose money. So I always just check where the retail traders are putting their money, and some way, somehow, I am almost always on the opposite direction of the retail trader. So
Yeah.
um, I just like to combine all those things together, and then I get on my chart. I start to look at where the order block is, where the buyers are, where the sellers are, where liquidity is, trading gold. Gold is always hunting for liquidity. So I just get to take my trades up from those levels.
Nice, nice. So, just looking through your trading statement, I can see that you pretty much were just trading gold and euro, and I can see that you had quite tight risk management, which is great. And when you had winners, they were big winners. So you didn't you in order for you to pass, you only took about 49 trades approximately, which is quite impressive, because you only achieved a 1.25 drawdown during that period before hitting the actual target. So based on that, with a 50% win ratio, yeah, it's 51% win ratio. It shows that you have a really good eye for picking out winners, winners that have a high risk reward. So, what kind of risk reward do you aim for? And do you have one target and you exit everything, or do you have multiple targets and you exit slowly?
Okay, so I have one trade, you know, a setup. When I see the setup, I take one trade, I put my stop loss, but I don't like to use take profit.
Okay.
I don't like to use take profit because I like to, let the winners run for how long they want to run. So most times I just get stopped out for a maybe very tight stop loss or break even.
Yeah.
Once the market moves in my favor, maybe at 1%, I just move to a bit above my entry or below my entry, so I'm not losing too much, and then allow it to run. Of course, knowing this is gold. When gold wants to run, gold just goes.
Yeah.
So that helps me a lot, and then once it goes, I then trail my stop to the point where I know, the way gold reacts, it can go 200 pips now, and in the next 1 hour, it's back. So once it goes, I just like to trail my stop and then see reaction for about 2 hours or 3 hours. If it doesn't come back, and then I just keep trading my stop until I get stopped out. So I don't like to use take profit. Because in that way, I always somehow have to stay glued to the screen, checking what it's doing, So once I have my trade move in my direction, I just want it to stop loss, and then I can sleep.
Yeah. Okay. That's interesting. Yeah. Would you say the majority of when your trailing stop gets hit, is that usually when you exit, or is it your exit sometimes it's just manually when it reaches a certain level you just exit the full amount, or is it you always exit with your trailing stop?
Okay, so sometimes because I know how gold reacts when it's coming back. I know it's coming back, so sometimes I just exit once I know eventually it's going to get stopped out. And that happens when I go to the low time frame, and then check where liquidity is on the lower time frame.
Right.
Gold always goes back to one for the liquidity, and I never know what the market is going to do. So I can say the market is going to run for 500 pips, for instance, and it just runs for 150 and gets back. So I stay hungry first of all, and I stay satisfied second, with what I get off the market at a particular point in time. I try as much as possible not to get too attached to each trade, because if I get too attached to each trade, I'll just leave that trading stop, and eventually I'll have more break evens or more tiny stop losses because I'm waiting or because I think the price is going to run in my direction for a long time. So I don't like to predict the market for too long. I just like to take my own share and then
Yeah.
the next trade, of course.
Yeah. Awesome. Thanks for sharing that. And now that you're a portfolio manager, and we're coming up to a new year now, what's your plan for 2022 with your trading?
Okay, so this is, like we said, a new baby that I need to nurture. I have, a very long-term plan with CTI. I think CTI is a fantastic company, and I think CTI has helped me build that discipline when it comes to risk management. So I'm going to be adding some more pairs to my trading, not just gold and euro USD. I'm, going to create more time to do some more analysis on the charts, and then I'm just going to plan the year. For each stage, I plan to achieve. I'm writing it down this year before the end of the year, and then by January I can start executing one after that.
Fantastic, yeah.
Also important for me to scale this and be a great portfolio manager, because I need to build that track record. There are endless opportunities to partner with CTI, being able to show that you have trade for a proprietary, special proprietary firm like CTI, and a lot of doors can open from there.
Yeah. Well, I'm looking forward to seeing you progress. You've demonstrated that you know how to apply your edge. You know how to respect risk management, and as long as you continue doing so, that like you said, it's just one step after the next. Gradually, you start to scale even more. As a portfolio manager, you have a lot more flexibility. So, especially with the new drawdown, you have an absolute drawdown. There's no time limits. There's no minimum active trading days. You have so much more flexibility. So definitely take it easy. There's no rush again. When you see your setup, take it. When you don't see it, don't take it. And I think that would be my advice as a portfolio manager. And you said you're studying at the moment. You're studying finance, so sometimes you might have exams. During these times, you need to just take it easy. Take a step back from the trading side of things. No need to force anything. There's always new opportunities, especially with gold. Always new opportunities. So I guess that would be my advice. So if you had some advice to give other traders, potentially, other traders who might be studying, also working part-time, who would like to, or they have an ambition to be a portfolio manager, what kind of advice would you give them?
Okay. First things first is to learn the process of trading. A lot of marketing out there suggests trading, investing is the get rich quick, kind of career you can have, and it's just taking it slow, taking it one step at a time. So imagine a 10% profit on $2 million, for instance. So the idea of flipping should be eliminated totally from your mindset, and then just have fun with it, which is what I do. I just have fun with it, and it's been a good journey. And risk management is the most important thing when it comes to trading. That's what I'll say to anyone trying to get into this space.
Well, that's really good advice. It's risk management, position sizing. It makes the difference between passing an evaluation and scaling as a portfolio manager. It's just knowing when to, one, hit the brakes, and two, hit the gas. So on that note, I want to thank you again and congratulate you on passing the CTI evaluation. And as you know, here at CTI, if ever you need some advice, some guidance, you've got the senior traders that you can reach out to. You can reach out to me, and we can discuss anything to do with your sort of performance, your trading plan, your trading psychology, all of these things that have such an impact on your trading. So we always have an open door for our portfolio managers. So yeah, on that note, thanks once again. Congrats and happy new year to you.
Yeah,
And I'm looking forward to seeing your results in 2022.
yeah. We'll meet in the Discord chat room and talk about it.
Yeah, exactly. Yeah, reach out to me on Discord anytime. Okay, Ayo.
All right. Thanks.
Thanks very much.
Have a nice day.
And you take care. There you have it, guys. That was Ayo. You've heard his story. You've seen how he has managed to pass the evaluation, and doing so by following his rules, staying disciplined. And if you're looking to get started with an evaluation with us, now is the time to do it. It's a new year, new opportunities. And if you're struggling with a strategy and you want to learn, then we have educational programs that will teach you from the basics how to trade all the way up to advanced strategies like the corrective, bank level trading, the STT. So all the links are in the description below, and head over to our website and you'll be able to see exactly in more detail what these programs have to offer you. On that note, thanks for watching. Make sure that you like, hit the bell notification so next time we bring in more videos, you'll be notified. Take care of yourselves. I'll see you in the next video.